Hi, folks. This is Lee with the Market Sense for the week of April 28th, 2020. The charts in this presentation are provided to us by Gettess, come from their Trade Navigator software. And this is our weekly bond market chart. The 30-year bonds, as you can see, we're not doing much but going sideways. We'll be talking about this 192 to 167 probably for the rest of the year. They're going to stay within that, I believe. And they're not only staying within that, they seem to be shrinking down and staying within the moving averages and just sort of, trying to find a direction. I think that'll happen unless stocks either explode up or break down. And even then, I'm not convinced that it'd move bonds out of here. For this week, the key areas are probably resistance around 182.13 here and support, say, 178, 10, 11, 12 down here at the lower band. The middle moving average here at 180.10 is interesting because back here 3 weeks ago is the only time we've closed below it for the entire year. And they got right back above it, and now they seem to be kind of trying to use it as support so far. It doesn't mean they won't break below it. But that amount of strength, the fact that they're holding above that at this point, suggests they might want to try to go test this high. I honestly don't think they can get there, but this is certainly an indication of strength at this point. I can't get excited about anything, though. They're not going to make a major move until they break out of that big 2-week range there. And I don't see anything that's going to drive them out anytime soon. So even if they move higher here, I wouldn't expect a tremendous move. And well, unfortunately, there's just not a whole lot of great opportunities setting up in the bond market. Stocks are acting a little buoyant here, kind of surprisingly. They are in the area of resistance that we've been looking at virtually since they made the low. And they're kind of sort of holding it. I mean, this is, well, let's just call it the 2900 area. They've poked above it and come back below it. It looks like they should at least go back down to the 2774 area. But this being an inside bar, it's not a tiny range inside bar, but it is an inside bar, and taking out the highs of this can often indicate a breakout. Now, this doesn't look like a breakout because breakouts usually just go and they're gone, and this one went up and kind of came back a little. But there's still a possibility that they will continue to the upside, and the reason that I think that is there appears to be somewhat of a disconnect between the stock market and the economy. There's a lot of people who think all they need to do is open the economy back up and everything's hunky-dory. Don't count me in there. I think there's plenty of problems for a lot of companies, and I think stocks are maybe a little too optimistic. However, I learned a rule a long time ago that there are two rules, actually, as it relates to trading. Number one is that the market is never wrong. And number two is in case of the market being wrong, refer to rule number one. So they should go down from here. They're not so far, and that could mean they're going to try to go higher, even though I think they're wrong. So I don't want to get married to the idea that they have to turn down from here. That's what I expect. I think they should test this low. I think they should probably take it out, but they're not doing that at this point. And so if they start going above the, let's call it 29.20 just to pick a price, if they start trading above there, well, then there's no reason they can't be back up in the 3200 area. I mean, there's no reason for them to be up here, and they are, so you just can't ignore that. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Hope everybody